Welcome to the deep dive. This is where we take those really complex documents and pull out the key insights, basically giving you that shortcut to, being truly well informed. Today, we are plunging into Oracle Corporation's recent Form 10K. That's for their fiscal year ended May 31st, 2025. And look, this isn't just about reading through a corporate filing. It's really about understanding the big strategic moves, the huge investments, and frankly, the critical risks a tech giant like Oracle is dealing with right now. Our mission here is simple. Make sense of all this, highlight what actually matters for you, and maybe uncover some surprising facts along the way. Make it stick.
Absolutely. Yeah, we're going to break down Oracle's core businesses, definitely dig into their ambitious cloud strategy. It's a big one. We'll look at their investments in things like AI and pull out those key financial and operational insights in the report. By the end of this, you should have a really solid, engaging grasp of, where Oracle is today and where they're trying to go.
Okay, so to get where they're going, maybe we need a quick look back. Oracle's been a huge name in enterprise tech for, well, decades. What does this report tell us about their sort of foundational story and where they are now?
Well, yeah, Oracle Corporation officially incorporated in Delaware back in 2005. But, their operations actually started way earlier, June 1977. Their main offices are in Austin, Texas now. And the report, it labels them a well-known seasoned issuer and a large accelerated filer on the NYSE, symbol or RCL. That's basically just jargon, meaning they're a massive, stable company. They meet certain size and reporting history requirements, gives them a bit more filing flexibility. As of early June 2025, they had over 2.8 billion shares outstanding, and the market value held by non-affiliates, over $305 billion back in November 24. Huge numbers. And leadership, still pretty consistent. Larry Ellison, the founder, is chairman and CTO, and Safra Catz is CEO.
Okay, that paints a picture of their scale, definitely. How does that break down into their actual business structure today? The report mentions three main segments, right?
Exactly. Three main pillars: cloud and license, hardware and services. But the real takeaway here, the dominant piece, is cloud and license. It's huge. We're talking 86% of total revenues in fiscal 2025. That's even up from 84% the year before.
86%.
Yeah.
Wow.
Hardware is only 5%. Services are 9%. So, Oracle isn't just playing in the cloud space. Their cloud and license business is basically Oracle now.
Okay.
And it's still growing its share.
Right, and that actually leads to what really jumped out at me in this report. Their really aggressive push into the cloud. They call it a material migration.
Correct.
Just how deep does this go? What are the kind of the big moves here?
Yeah, this is absolutely central to their strategy. They see this material migration happening, moving their existing customers from, the old on-premise stuff to the Oracle cloud. And interestingly, they state they're still in the early stages of this shift.
Early stages.
Yeah.
Still.
Yeah, which suggests they see a long runway for growth here. And it's not just talk. The numbers back it up. Customers shifting from those old annual license support deals to Oracle Cloud. That contributed $4.3 billion to the increase in annualized cloud revenue just over the last 3 years.
Okay, $4.3 billion just from migrations.
Exactly. And you see the overall trend, too. Cloud services revenue as a percentage of total revenue is 32% in fiscal 23, then 37% in 24, and now 43% in fiscal 2025.
Okay, so a steady climb.
Definitely.
Yeah.
And they expect that trend to continue.
That's a clear strategic focus. What about their specific cloud offerings? It sounded like they have, well, a lot of different flavors, almost customized options.
They really do. It's not just one size fits all. Their main umbrella is Oracle Cloud Services. That includes Oracle Cloud Applications, or OCA, think ERP, CRM, their big business software suites, and Oracle Cloud Infrastructure, OCI. That's the underlying computing power, the storage, the networking, highly scalable, secure stuff. OCI includes everything from standard virtual machines right up to powerful GPU-based systems needed for, training big AI models, plus all the storage options: block, file, object, archive, and networking.
Okay, so the apps and the infrastructure, but you mentioned flexibility.
Yes, and this is where it gets really interesting, maybe a key differentiator for them. They go way beyond just the standard public cloud model. They're actually bringing the cloud to the customer, like Oracle Exadata Cloud at customer. It lets customers run Oracle's top-tier databases, like autonomous database, right in their own data centers, but Oracle manages it.
Ah, okay, so a control but managed service.
Precisely. Then there's OCI dedicated region. That's like dropping a whole self-contained OCI cloud region inside a customer's data center. Full cloud capabilities, but physically theirs.
Wow, okay.
And OCI Sovereign Cloud. That's crucial for regulated industries or countries with strict data residency rules. They even talk about sovereign AI capabilities.
Sovereign AI, interesting term.
Isn't it? Then there's Oracle Alloy. This lets partners basically become cloud providers themselves, using OCI as a foundation, but building their own branded tailored services.
So enabling an ecosystem.
Exactly. And finally, Oracle Compute Cloud at customer and Oracle Roving Edge infrastructure. These push cloud computing and storage right out to the network edge, or even into places with no connection. So the theme is flexibility, control, meeting very specific, often complex enterprise needs.
That range is genuinely fascinating, especially that idea of bringing the cloud to the customer, not just making them come to the public cloud. It really hints at the resources they're pouring into this. So beyond this massive cloud push, how else are they investing in, future innovation and also their people? It's a huge workforce.
Right. Well, R&D is a huge piece, research and development. Fiscal 2025 alone, they spent $9.9 billion on R&D.
Almost $10 billion.
Yeah, up from $8.9 billion the year before and $8.6 billion the year before that. It's a steady increase. And this isn't just keeping the lights on. It's focused on enhancing what they have, sure, but also developing totally new tech. And AI is explicitly mentioned as a major focus. Another key strategy. Acquisitions. Oracle has a long history of buying companies. They've spent billions acquiring technologies, products, services that either complement or enhance what they already do. The goals are expanding their customer base, getting innovation faster, and, well, growing revenue.
Right, buying capabilities instead of building everything from scratch.
Exactly. And they state very clearly they expect to keep doing this when the right opportunities pop up.
It makes sense in such a fast-moving industry. But does that always work out smoothly? Integrating all those acquisitions must be a challenge sometimes, right? Keeping that Oracle culture. And speaking of culture and people, how do they manage such a massive global team?
That's a fair point about integration challenges, and yeah, the report does list acquisition integration as a potential risk factor. As for the workforce itself, as of May 31st, 2025, they had about 162,000 full-time employees globally.
Wow, 162,000.
Yeah, roughly 58,000 in the U.S., 104,000 outside the U.S. What's really striking, though, is employee tenure. The average tenure is around 8 years, and 30%, almost a third, have been with Oracle for 10 years or more.
Huh, in tech. That's actually quite high.
It really is. It suggests maybe a level of stability, maybe strong career paths, something that keeps people around, which isn't always the case in this industry. They also emphasize learning. They reported 4.7 million hours of training in fiscal 25, 2.5 million online learning views per month, and they seem to listen too. 83% participation in their annual employee engagement survey. That's pretty high participation. Beyond just the employees, they also highlight their social impact stuff. Tens of millions donated in fiscal 25 for education, health, communities, environment. They mentioned their Oracle Health Foundation, Oracle Education Foundation, even a partnership with a specific high school, Design Tech High School.
Okay, let's shift to the numbers, the bottom line. What's the overall financial picture look like for Oracle in fiscal 2025?
Well, looking at the top line, total revenues grew 8%, reached $57.399 billion in fiscal 25. Pretty solid growth. Now, total GAAP operating expenses, that's, the standard accounting costs.
Yeah.
They did go up by about $2.1 billion.
Okay, why the increase?
Primarily higher costs for infrastructure, and employees needed to support that big cloud expansion we talked about, plus that increased R&D spending. But here's the interesting part. Despite those higher costs, their total operating margin actually improved. It went up to 31% from 29% the year before.
Huh. So they got more efficient even while spending more.
Seems that way, yeah. It was pretty good management. Net income landed at $12.443 billion, and diluted earnings per share was $4.34.
Okay, solid top line margin improvement. But I did notice something potentially counterintuitive about their free cash flow. That's often a key metric people watch. Can you unpack that for us?
Yes, this is a really crucial point, and it tells a big story about their strategy right now. So net cash from operating activities was strong, over $20 billion. That's the cash generated from their core day-to-day business. But free cash flow, which is basically operating cash minus capital expenditures, the money spent on big long-term assets was actually negative $394 million.
Negative. After being positive $11.8 billion the year before, that sounds dramatic.
It is dramatic, and it begs the question, why? What does negative free cash flow mean here? It means Oracle spent more cash building things, primarily data centers, than it generated from its entire operations. It's almost entirely due to a massive spike in capital expenditures, or capex. They spent $21.2 billion on capex in fiscal 2025.
$21 billion.
Yeah, that's a 209% increase from 2024. 209%.
Okay, so this isn't a sign the business is failing. It's a deliberate choice.
Exactly. This is Oracle making an enormous multi-billion-dollar bet. They are pouring cash into building out data center capacity to fuel their cloud growth and increasingly AI capabilities. They're essentially sacrificing near-term free cash flow generation for what they hope will be long-term dominance in the enterprise cloud and AI markets. It's a very aggressive investment posture.
Right. A huge bet on the future. How has all this, the strategy, the investment, the performance, how has it played out for shareholders?
Well, shareholders have done pretty well, actually. Oracle paid out $1.70 per share in dividends during fiscal 2025, totaling $4.7 billion. They also have a stock buyback program going.
Yeah.
They repurchased $600 million worth of shares in fiscal 25, and they still had authority to buy back about $6.4 billion more as of the end of May 2025. And looking at the stock performance itself over 5 years, it's been strong. If you invested $100 in Oracle stock back on May 31st, 2020, and reinvested the dividends, it would have grown to $331.05 by May 31st, 2025.
Wow, over triple. How does that compare?
It significantly beat the broader market. The S&P 500 index would have turned that $100 into about $209.05 over the same period. And it also beat the Dow Jones U.S. Technology Index, which came in around $272.04. So, yeah, the market seems to be rewarding their strategy, despite that negative free cash flow number perhaps raising eyebrows initially.
Okay, so strong performance, big bets. Let's shift gears to the challenges, the risks. What are some of the key warns Oracle flags, especially around all this new tech and the global environment?
Yeah, they definitely lay out some significant risks. AI is front and center. Generative AI, agentic AI, large language models, LLMs. The report explicitly states this tech is highly competitive and rapidly evolving. That's code for things change fast, and it's hard to predict winners. The risks include their AI products maybe not working as expected, or not meeting customer needs, or simply competitors' products gaining more traction. What's really complex here, though, are the surrounding issues. Legal, regulatory, ethical questions. Things like claims of bias in AI, discrimination, lack of transparency, AI doing unpredictable things, or using copyrighted material improperly. Big issues.
Yeah, those are definitely making headlines.
Absolutely. And the regulatory landscape is still being formed globally. This uncertainty means Oracle might have to change or even limit its AI offerings in certain places, which could obviously hurt competitiveness.
And cybersecurity, data privacy. Always huge concerns, especially for a company handling sensitive health and financial data like you mentioned.
Oh, for sure. They flat out acknowledge they're a major target for cyber attacks, precisely because they hold so much sensitive data. The potential consequences are severe. Unauthorized access, data theft or alteration, service shutdowns, major reputational damage. Plus, you've got huge potential costs for investigation, fixing the problems, legal battles, and regulatory fines. They specifically call out GDPR fines up to $20 million or 4% of global revenue. And they remind investors that another big U.S. tech company got hit with a $1.2 billion GDPR fine in 2023.
Ouch. So the stakes are incredibly high there.
Extremely high. And connecting this to the physical world, supply chain risks are also a factor. Oracle depends on third-party manufacturers for hardware. Shortages of critical components, especially things like, quote, AI accelerators, including graphics processing units, GPUs basically can drive up costs or just make it hard to get the parts they need to build out their infrastructure.
Right, the AI chip crunch we keep hearing about.
Yeah.
What about the human side of risk? Finding and keeping the right people in this kind of environment.
Yeah, that's definitely highlighted. Competition for talent, especially people skilled in AI, is incredibly fierce. It's an ongoing battle. They also mentioned that workforce restructurings, layoffs or reorganizations, even if done for efficiency, can be really disruptive, can lead to lower productivity, losing experienced people, hitting morale, making it harder to keep the remaining employees, and just rising salaries. If compensation costs go up without productivity keeping pace, that's a risk to margins too. Finally, there's the whole geopolitical situation. Ongoing wars, international tensions, currency fluctuations, all this creates economic and political uncertainty that can definitely impact Oracle's business, especially since so much of it is international. They even mention specific things like potential changes to sanctions or export controls, using the example of rules around providing internet hosting to TikTok in the U.S. These kinds of things could restrict who they can sell to or where they can operate. It's a complex world out there.
So wrapping this all up, what's the big picture takeaway for you, the listener? Our deep dive into Oracle's 10K, it really shows a company right in the middle of a massive strategic shift, betting huge amounts of money on the cloud migration and really pushing hard on AI innovation. They're investing like crazy in infrastructure, in their people, but they're doing it while navigating this really complicated global environment, intense competition, shifting regulations, geopolitical storms.
Exactly. Yeah, the dedication to moving customers to the cloud, those eye-watering capital expenditures, the focused R&D, especially in AI, it all points very clearly to their future strategy. It's a balancing act, really, leveraging their long history and huge customer base while aggressively chasing these new growth areas, and of course, trying to manage all the risks that come with operating at this scale in such a dynamic industry.
Okay, so here's a final thought for you to chew on, something to think about after we finish up here. Given Oracle's incredibly aggressive investment, particularly in that unique cloud at customer and sovereign cloud approach, alongside their AI push, how might their strategy actually reshape the entire enterprise tech landscape over the next few years? What new opportunities and maybe new challenges could pop up for everyone else because of these deep commitments Oracle is making?